Hi, and welcome to How to Buy a Home. I'm so happy that you are joining us. This is going to be a quick 20-minute brief overview of how to buy a house. My name is Jesselyn, and I am a realtor with Coldwell Banker. And I'm 27 years old. I've been doing real estate for 3 years, and I just absolutely love helping people find their dream homes and help them invest in their future and reach their goals of buying a house. So I just thought I'd offer this free little seminar. It's only going to be 20 minutes, and it's going to give you a brief overview. Whether you want to buy a house this year, next year, or 5 years down the line, you'll have the information and you'll be able to come back to me to ask questions or to actually get into the process of buying a home. So let's get started, because they don't teach you how to buy a house in college. They don't teach you how to buy a house in work. They really don't teach you until you start the process, and you're lucky if you have someone willing to teach you that's, really informative. So I live in Oceanside in San Diego, and so my seminar is really focused on the California purchasing process, and I believe that it would be pretty accurate for most other parts in different states. But I do want to preface that, not every state is exactly the same with real estate, so this is the California way. So let's get started. Like I said, my name is Jesselyn. I am a real estate agent with Coldwell Banker. I've got 3 years experience, and I just love real estate. I love helping people reach their goals. I went to NC State for college, and I studied communication media, and I really learned a lot of things that are useful in real estate today. So let's start off with why you should buy a house. There's a lot of benefits to buying a house, and there's a lot of people who have a lot of stories that come up around buying a house of why you shouldn't. So I want to really focus on the benefits, because they're massive, man. They're massive. So the benefits of buying a house, number one, is that wherever you live, whether you rent or own, you are paying to live there. So why not pay yourself instead of a landlord? I mean, you're paying someone's mortgage. Why not it be your mortgage? And so when you pay your mortgage, a percentage of that payment goes to interest, and the other part goes to the principal. And these might be words you've never really been used to hearing, but I'm going to explain it super simple. Principal goes into your bank account, and that's called equity. And it's not your checking account. It's like your house banking account. So that's called equity. And that's my second point on this slide, is equity. So when you pay your $1,500 or $2,000 every month, and it's going to range wherever you live, the price. I'm just using some whole numbers to be able to make this simple. When you pay that $2,000 every month, let's say $1,000 of it goes to your principal, which is your equity, and $1,000 of it goes to interest. Now, if you were to rent that $2,000, all of that goes out the window. So when you're paying yourself in your own mortgage, a lot of it starts to go into your own pocket. And then the beauty of having equity is that it's like you're your own little bank. So say you've owned your home for a while, you start to have this equity. You have this money that's sitting in your house. And say you want to remodel your house, or let's even make it more extreme, like you're having medical issues and you need to pay off the bills. You can take that equity that you've been putting into your house, and you can get a home equity line of credit, and you can have access to $50,000 or more, depending on how much you have in your house, to be able to pay off those bills, to be able to renovate your kitchen, or to go back to school. I mean, whatever you want to use it for. So that is just an awesome part of owning your own home. And it gets better. You also can have this thing called rental income. So say you're young like me, and you have a good job, and you're like, I'm going to buy a house. You buy a house, and you buy a 2-bedroom house, and you've got a friend, and maybe they're not on the same stage as you. You can rent to them. So they're going to pay rent somewhere else, so you could charge them the same amount to live with you, and then your mortgage payment isn't as expensive, and they're helping you pay it. Like, how awesome is that? Other people, they may even buy a house that has a garage that they can convert into a granny flat, and then they can rent that out for even more money, and that might cover their whole mortgage payment, or it would help a significant amount. So there's a lot of creative things you can come up with, and so you have that rental income potential. And then you can also deduct money from your taxes when you own your own home. So America loves when there's home ownership. They love if you own your own home. So you can deduct your taxes. So every house that you buy, and even when you pay rent, you're paying this, just so you know. When you buy a house, you're going to have around 1% in California. You're going to have 1.1, 1.2, depending on where you are, property taxes. But so say you bought a house for $500,000. Say your property taxes are about $500 a month. That $500 times 12 months can be deducted from your income taxes, as well as whatever that interest rate payment is. So, like I said before, a portion of your payment goes to your principal and a portion goes to your interest. That interest payment can also be deducted. So talk to your accountant, because I'm not an expert on this, but that is totally something that you can deduct from your income taxes. So there's definitely a huge incentive to owning your home versus renting it. And then my favorite point on this slide is pride in ownership. There is nothing out there that is like when you own your own home. Think about when you bought your first car and no one helped you buy it, and your friend comes and they've got dirty shoes, and there is no way that you're going to let them put those dirty shoes in your brand new car, because that car is yours. You worked hard for that car. And the same thing is with your house. When you own your own home, there's absolutely no other feeling out there. It's one of monumental moves in your life that is always a positive idea, and always you feel more empowered and more independent as an individual. So that feeling is something that I love, and I love helping other people reach. So how to qualify? This is like a huge question, and this might answer a lot of your thoughts that you might have on this process. So you're going to have a pretty decent job that you've had for at least 2 years. And there's something really cool out there, like if you just got your master's degree, that counts if you're in the field that you want to get your master's in. So don't rule this quite out. Talk to a lender to double check. So you need about 2 years of W-2s or 1099s, depending on how you get paid, because they're going to ask for that for your taxes. And if you were getting your master's, that's also a route that you can take. You're going to need to show 2 months bank statements. They want to make sure that you have some money in your bank account and that it wasn't just all of a sudden appeared, that it's kind of been in there for a little bit of time. And then you're going to need to have a pretty decent FICO score. So I always say if you're around the 600 range or higher, you're going to get a better interest rate, and it's more likely that you'll be able to qualify. If you're below 600, there's a lot of programs out there that can help you increase that rate, and I always highly recommend that, because you can qualify sometimes when you have less than 600, but you're not going to get the best rate. So work on your FICO score. It doesn't take that long to get it up, and I have those resources. So reach out to me and I'll be able to help you figure that part out too. So to qualify, you're going to need pretty decent job history, you're going to need some money in the bank, and you're going to need a decent credit score. And it's like 3 legs in a stool, and you can make it work with 2. It's always better to have all 3. So talk to me a little bit more, talk to a lender, and you'll get that information more clarified for you personally, because everyone's situation is different. Down payment. Down payment kind of scares people. And I want to kind of go over the myths that always exist, that people think you need like 20% down in order to buy a house, and that is not true. That's what's so exciting, is like there's first-time home buyer programs out there that allow you to put as little bit as 0% down to 3.5% down. The most common is 3.5% down. There are down payment assistance programs, and then there's the VA loan if you ever were in the military, that you don't have to put any money down, but not everybody qualifies for that. So I like to really announce that the first home buyer program is typically called an FHA loan, and that's 3.5% down. So say you had, let's use basic numbers, like a $100,000 house, that's $3,500 down. So as the amount increases, so does the down payment, but it's really significantly low compared to that conventional 20% down. And even with conventional, as you can see here on the slide, a conventional loan can literally be as low as 5% down or 10% down. It doesn't have to be 20% down. Like a lot of us have that notion that typically it needs to be that, and that's not true. I always tell my buyers that you need to estimate an additional 3% down for closing costs. Closing costs are from escrow fees to the loan origination fee. And every lender is going to be a little bit different, but most of them are going to charge you a cost for the appraisal and a cost for actually funding the loan. So I always want people to overestimate to be safe, so I always say 3%. It may not be that much, so thinking about what they tell you that you qualify for and thinking about what maybe 6 to 7% of that looks like, that is what you should estimate to have in your bank account. There are options where if you have parents who are more than happy to lend you the money or to help you get there, that a gift from them, that would be called a gift, that's totally acceptable too. And I've had buyers have that happen as well. So it really depends on your financial situation, your family situation, and your job situation, what this whole picture will look like and be customized for you. Interest rates. Lots of people want to talk about interest rates, and I always like to preface it with this chart. Now, we get really focused on, oh, well, interest rates just went up a point, or they just went up a few, or today they're really low. There's a lot of things and stories out there that people tell, but I want to really show you some hard facts from just the past. So this chart goes from 1970 to 2017, and they show you just the trend that interest rates has been on. Historically, right now, we are at the lowest interest rates that there are. In 1980, interest rates were literally like 17–18%, and in 1990, around 10%. And now they're like 4 to 5% in 2018. And it's going to change. It always changes. And that's what you can expect with the market. And that's kind of what makes it fun. But to be honest, like interest rates, whether you purchase a house at a 10% interest rate in 1990, if you wait 3 years, you can refinance and get a 6% interest rate. So the same situation is happening now. You might get an interest rate, depending on your credit score, around 5%. And if you wait a while, those interest rates may change, and it may be a good time for you to refinance. And so people are focusing on what interest rates are and not on what they get pre-qualified for. If you qualify for a $500,000 house at the current interest rates with the down payment and all that you have now, it's always a good time to buy, because you're going to be starting to put money into your house, which is that word equity. And when the market changes and maybe interest rates go down again, like you could refinance or whatever. It's what really matters is, can you afford the payment now? And we'll worry about the interest rates later. And overall, like, interest rates are really, really low in comparison to where they have been. So I just want to make sure that you know that as you move forward, so that you really have a good idea and understanding of what this interest rates means in the world of real estate. So why use a realtor? That's a great question. And with today and the internet being what it is, and being able to see homes on Zillow, Realtor.com, and all those other types of websites, why do you use a realtor? And I'm going to tell you the reason why. First of all, in California, the seller pays me as your realtor, and so that I can work with you for free. So when you buy a house with a realtor, you aren't paying the realtor. The seller is paying the realtor. So I don't see why you wouldn't use a realtor if you don't even have to pay for it. And then there's a lot of other reasons why to use a realtor too besides money. The MLS, which is the multiple listing services, which is just the database that's available to realtors only, is way more up to date than Zillow, Trulia, or Realtor.com, or any of those websites, because we can find out like what your neighbor's house sold for, or what the house down the street sold for. And so we can compare that to the house that you're looking to buy and be like, hey, you know, they priced it $20,000 more than any other home sold, and they didn't do any updates. This is what we recommend that you purchase it for, and this is what I would offer if I were you. So we can give you realistic information based on hard, cold facts that will help you make the decision a lot more easier. And it's not as easy to find that information on those alternative, they're called third-party websites. So with a realtor, you can get up-to-date and accurate information. Another huge one, which I think is overlooked all the time, why to use a realtor, is emotional support. When you buy a house, especially if it's your first time, it's an emotional roller coaster. You may make several offers and not get them accepted. And you may find out that the house that you absolutely loved has like a huge issue. So when you work with a realtor, they're there to guide you and lead you, because they do this every single day, that they know what's a good move and what's a bad move, and maybe when you should keep moving forward or when you should walk away. And they're there to say, hey, this is normal. I see this all the time. I work in this field every single day, and like, this is totally normal. Or hey, like, maybe I would recommend that you do this. So that is why you have a realtor, is really the emotional support. And then a huge piece is negotiation. Negotiation is one of those skills that I work on every single day to improve and to be my very best in. And negotiation as a buyer agent is that I want you to get the best deal possible. I want to make sure that you walk away from this whole experience knowing that you got the best price for your home, and that if, say, there was termite damage, we got the seller to pay for that. Or say that there was issues with the piping, you know, we came to a result that maybe we reduced the purchase price, or maybe you got a credit back, or maybe they fixed it for you. Like, there's a lot of ways to negotiate, and it's not just with the offer price. It's with the home inspection, it's with the appraisal, and it's up to the day of closing. So having a realtor on your side who negotiates all the time and is an expert negotiator is really going to help you get the best deal and feel the best possible about the purchase of your home. And I love this little meme, every realtor is just a ninja in a blazer, and Modern Family is just, it really is an accurate description of a real estate agent. I provided you guys this little timeline to kind of give you an idea of what to expect. I always like to know what to expect, so I want it to be pretty clear that in California, you know, the whole process could take a varying length of time. The very first step is to get pre-approved and have coffee with me. We want to go over, you know, all the details of your life to make sure that I know what to really search for. Like, do you want a condo or do you want a house with a yard? Do you want to live by the freeway so you can get easily commute to work, or do you want to live in the countryside? Like, I need to know about you and your life, and that's also my favorite part of being a real estate agent, so that I can help you find the perfect house. And you're going to look too, and you're going to go to open houses on the weekend, and I'm going to take you during the week to different homes that maybe you didn't see before, and we're going to find that perfect house. And when we do, we're going to write an offer, and I write the offer. We do it based on the terms that you tell me, and if they accept your offer, we open escrow. And escrow is this word that not a lot of people know what it means. Escrow is just the time frame from when you get your offer accepted to the day that you close. And it ranges from 30 to 45 days, just depending on the situation. And it's where you're going to get your inspection done, you're going to have an appraisal, you're going to get your loan approved, you're going to autograph your name 100 times, and then finally at the very end, you're going to get the keys to your brand new home. And that's probably the most exciting and rewarding part of my job, is to hand off that key to you. This process can range, like I said, from all different time frames. Some people take 6 months to look for a home, some take 2 months, some take a week. It all depends on what you're looking for and what's available on the market. I've even had clients who've taken a year. So what really happens is that first initial meeting, we meet, I get to learn all about you, and and then I get to explain this process to you a little bit more in detail, and I take you and I hold your hand along the whole entire way. So when you own your own home, you own your future. It's one of the very best investments that you can ever make in yourself and in your future. And the reason is that you got to pay to live no matter where you live. And you're either going to be paying someone else's mortgage or you're going to be paying your own. And when you pay your own, you start to build this fund of money. And that's something that you can actually take and buy a bigger house with. You can take and buy investment property. How we support ourselves. And when you have the opportunity to be able to invest in yourself and to invest in a place that you're going to live and love and enjoy and have parties in and bring your friends over and build a family, it's really, really important that you are putting a monetary amount each month into and caring about, so that whether something comes up in the future, you can pull money out and put it there. Whether you want to send your kids to college, you can do that. Like, it allows you to do so many things, and that is why I'm so passionate about being a real estate agent. And I'm always here to answer any of your questions, whether you live in California or Seattle or Philadelphia or wherever you may be. Maybe you're in another country. I'm here to be a resource for you, to help you make this empowered move towards your future, because there's nothing more exciting for me than to help you make the best decisions in your life. So feel free to reach out to me. My information is all attached to this. You can follow me on Instagram or Facebook, and I'm here to be of service to you and to help you, buy your dream home. Whether it's today, tomorrow, or 5 years down the line, I'm here to help you. Thank you so much for participating in this webinar, and please let me know your feedback, and I'm so happy to hear from you.